Good. Sorry. My admin's sending me messages in the background. I checked the boxes, so we're all set. I apologize for that little faux pas. We're real happy to have you here. I'm Tracy Ruberg with the Circuit. So I think I know most of you, so thank you for attending. And we've got Denise, Max Technical Training today, and Tom from RSM. I'm going to ask them to give an introduction here in just a minute. I do want to make sure I thank ATC. They are our host for this year for this series. Without them, this kind of stuff couldn't be done. Unfortunately, none of them were able to make it this morning due to scheduling conflicts. So, well, but we do want to thank them. So we're going to cover kind of two things today, but both of them are ways that give you money back into your business to help, so you can use it to help fund other projects. One on the training and education side, and one, believe it or not, on the tax side. So we're going to start with Denise and go through the education and training stuff, and then we'll roll over to Tom, who has joined us from RSM, and he's going to give us some background and get us up to speed on an R&D tax credit that a lot of IT folks know nothing about, but actually applies to a lot of what we do. So I'm going to share my screen now and get us going here so that we can have some Q&A. We've got slides, since this is a highly technical presentation, to kind of help get through the detail. So Denise, if you would start and give a little introduction of yourself.
Yeah, do you want to go to slide 1 or 2 or?
Yeah, I'm trying to. There we go.
Yeah, that's good. All right. Well, hi, everybody. First of all, I want to thank Tracy and the Circuit for inviting me to this. This is a subject I'm extremely passionate about. I'm very pushy about it because I'm amazed that people aren't taking advantage of it. Max, just as an introduction, is been around for 23 years. We specialize in training to IT professionals, software developers, knowledge workers, IT managers in regional companies and Fortune 1000 companies throughout the United States. We have evolved over the years, as you can imagine, from what we provide training into based on what our clients want. We're always listening, and we deliver those trainings in open enrollment classes. You can go to our website and you can find a class and just sign up as an individual. Or our biggest thing is we do a lot of private customized solutions for clients. So whether they have 4 people that need something or hundreds of people that need a certain amount of training, it could be Office 365, or it could be, we need these security people to get up to speed on Kubernetes. So it's a wide range. We have a lot of different specialists that we have vetted throughout the country that provide our training. So we pretty much can do almost any kind of training for our clients. We deliver that training in person. We deliver that training virtually on just about any virtual platform. And we deliver it through e-learning or a combination of all of those to really help the client meet their budgetary and timing needs. So that's a little bit about Max.
Great. So let's kind of roll into what are the various options that are out there to pay for training, and why do we?
Yeah, right. So so everybody, there are so many different options to grow IT talent, and really every state, every city, every county wants to build their IT talent. IT, as you know, is a big thing, and IT isn't just the back office, the geeks. It's like knowledge workers and power users. So there are funds for individuals, whether they are unemployed or underemployed. There are programs for organizations, and that's probably where we'll spend the most time, because I think everybody's probably more interested in that. And then there's a combination of all of these things. So Tracy, you can go to the next slide. So for the individual, there are, and these are just a few of the slides, and I'm going to close this little window here so I can see the slide myself. Let's see, how do I do that? Okay, whoop, now I lost the slide. Sorry. See how I'm not ambidextrous at all? Right, I'm going to move you here. Okay, there we go. So WIOA is probably the biggest funding source. WIOA is a federal program that basically the money comes from the federal government, gets allocated to the state, and then the states allocate that to each of the counties. And every county interprets this themselves, which is very interesting. They do have some standardization, but there's all kinds of different programs. So for example, the individual can get $5,000 to $8,000 if they are unemployed or underemployed to go to training at companies like Max, or really they could go to truck driving school. IMAP is another program that is just in the state of Ohio. We're in our first iteration. There's 12 providers right now in the state, Max and UC being one of them. And these are what they call micro credentials. So it could be an ITIL class, or it could be a series of Excel classes. The CARES Act, as we all know, there's a lot of money flowing in from the federal government to our states and to our counties through the CARES Act. And these funds, every county, again, is reinterpreting what they're doing with these monies. Is it a stipend while someone's going to training? Is it training dollars if they don't qualify for WIOA? It just goes on and on and on. Apprenti is a legal apprenticeship program, which I'll explain more when we get into the organization program. But again, this is something for an individual. They could, if they apply and they get into this, they don't have to be unemployed or underemployed or anything, but they could get into a boot camp type training program. By the way, the dollar amounts at the bottom are usually the range of dollars that are involved, or the equivalent dollars. And these are monies that the individual does not have to pay back. So WIOA, IMAP, CARES Act, Apprenti, and Perscolas are programs where the individual does not owe any money. Tech to Thrive is a local nonprofit organization here in Cincinnati, and they're providing scholarships, maybe one or two at a time, into individuals that want to take like a developer boot camp, and they pay part of that back. And Perscolas is a well-known national program here in the United States, and they do have an organization here in Cincinnati, and I believe one in Columbus, and they offer no cost to individuals that are low income. All right, so if we could go to the organization one, Tracy. The next one, yeah, thank you. Okay, so for organizations, I'm going to spend the most time talking about this area. Ohio Tech Cred, I hope by now everyone knows about that, but I will spend a whole slide on that. On the job training is something that a lot of folks don't know about, or they don't know how to take advantage of it. The federal stimulus, everything from new funds that have just come in, as we've all heard about, these trillions of dollars that have just been allocated by the Biden administration that are now coming into our region. Apprenti Cincinnati and Ready Cincinnati, or Jobs Ohio. So Tech Cred, how many of you have heard about Tech Cred? Can I just see some hands? Okay. So I just want to reiterate that this is, I put in this slide that it's in our 7th round. It's really, we're in our 8th round right now. So that was a mistake. So each enrollment period, the employer can apply, and I'm just saying apply, for up to $30,000 per enrollment period. So think about that. If your organization had done this 7 times, that's $210,000 that you could have had towards training. And this is basically the employee can take the training anytime within 12 months. The individual can have multiple credentials, and each credential is about $2,000 each. And I want to say to everyone, don't get confused about credentials. It doesn't mean you have to get a certification. A credential is just a certificate of completion. It could be, I've taken one Excel class, or I have gotten a certification in my ITIL or Agile certification. But that is not they just had to come up with a term, and each credential is worth $2,000. So if a person takes a $3,000 class, the company gets reimbursed $2,000. If they take a $1,500 class, they get reimbursed $1,500. we are now in an open enrollment period. So April 30th is the deadline, I believe, at 3 o'clock. So if you want to know anything about that, I'd be happy to help you. The way this works from a funding standpoint is you apply, you get approved, and I have not seen anyone not get approved. You get approved, and then you go ahead and use that training. Now, the companies have to be based in Ohio, and the individual has to live in Ohio. So the individual takes the training, you pay the provider, and then you get reimbursed. They're all around technology programs, whether it's IT or security or anything like that. Okay, Tracy, thank you. All right, so now these get a little more confusing. On the job training is a federal funded program. This has been around, I would say, as long as I can remember. In fact, one of the first boot camps that we did a private one for Great American Insurance. And the total price of that boot camp was 12 weeks. We had 10 people in there. It was $150,000. And Great American got reimbursed $75,000 from the state of Ohio. So these federal funds are different all the time. But what I want to say is these are normally for hiring new people into an organization or upskilling incumbent workers. And if there is a initiative that involves, I would say, around at least 10 people, it's worth the time to look into programs like this. And again, I'm happy to help anyone that wants to ask questions about this. This does not just need to be IT, it could be anything. It could be truck drivers. But obviously we're focused on the IT world. Federal stimulus dollars. So just last week, I was on the phone with a executive from Hamilton County that said, and I think we all know about the trillions of dollars that are flowing in right now, whether it's going to be through the CARES Act or these other federal stimulus programs. Hamilton County has gotten a chunk of money, and 75 million of that, just that portion, is going to be allocated to work-related programs. And they don't even know what they want to do with it yet. They don't even know how they want to spend it. And basically, he said to me, Denise, just come to us with a good story. So what I'm saying to all of you or any organization is to, think of what kind of program, whether you want to take people off of welfare or you want to improve the lives of people within your own organization and haven't been able to afford it, if it's e-learning, if it's instructor-led training, whatever it is, come up with a good story. And I think there are ways that they want to spend this money because they don't want to have to give it back. Okay, Apprenti. How many of you have heard of Apprenti? Because that's gotten a lot of, okay. So real quick, Apprenti is basically a legal apprenticeship program. And what's nice about apprenticeship programs is that the company does not have to make a commitment to hire these individuals. They can try them for about a year and then they can hire them. But the idea is that they would basically hire them. And when they do hire them in that first year, they can hire them for 60% of the prevailing wage. So if your company has a entry-level developer role and that person has to be hired at 60,000, well, you can hire that person at whatever 60% is, 45,000 of that amount. So we've seen Apprenti is a national program. It's based out of the state of Washington State. We have 2 Apprenti offices in Cincinnati, one that's through the Chamber of Commerce here in Cincinnati, and the other one is in Columbus, Ohio, which is part of the National Apprenti Organization. But these are great programs. You don't have to set up an apprenticeship yourself. It's pretty much turnkey. And then Ready Cincinnati. Ready Cincinnati is an economic development arm of the state through Jobs Ohio. And Ready Cincinnati has been very creative in getting companies to move into the region and getting companies to stay in the region. And a lot of times they have the ability to offer incentives. Well, one of the incentives are um, talent acquisition and talent education, getting their teams up to speed, acquiring them, or training their existing people. Now, you know, these are bigger initiatives. We are right now working with Ready Cincinnati on a local company that basically said, hey, you know, we'd like to stay here in Ohio. What are you going to do for us, kind of thing. So, and they're looking at some IT training. So I'm going to pause for a second and see if anybody has questions. Boy, I must be doing a great job. Okay, let's keep going.
Yeah, with sharing my screen, I can't see all of you, so
Okay.
hopefully you guys
That's
can
when it's
see
good to
each
have a
other.
second screen.
Yeah, that's probably true. But please don't hesitate to use the chat as well.
Okay, great. So, you know, one of the questions Tracy asked me was, you know, why are these programs out there? And, you know, it's really interesting because there are, you know, I mean, it seems like a no-brainer, but the individual, so if you know anyone who's unemployed or if you've had to lay off people, you know, I want you to know about the individuals because that is, you know, so important for a quality of life, for them to get a better job. I mean, one of the things that when we started the boot camp line of business and now we're working with individuals that are changing their careers, you know, it is like, I probably cry every time they graduate because it's amazing to see them change their lives and get these jobs and go from working in a restaurant to being the top mobile developer in a company. They become a contributor in an organization. These are smart people that just didn't pick the right career because IT wasn't very glamorous at the time. So, and for the employer, I mean, really, when we all want to have our employees stay, we want to be sticky, and a lot of times we just don't feel like we have the time or the money to invest in our employees. So that's where we want to help by, you know, making you aware of all these funding sources that are out there, so you don't have to worry about the dollars. These funding sources are out there and they're not going to be here forever. They're going to go away. So, you know, let's take advantage of all the money that's coming in right now, upskill your employees. And obviously that creates a great company culture. So I think that's, oh, and if you do need any more information, I did, and I know that Tracy's going to share these slides with you. Here are some links to these programs out here. Christina Masali from Apprenti is happy to talk to you. So there's her email address. And if you're interested in any of this and you want to reach out to me, my information is also in these slides.
Great, thanks.
You're welcome.
So any questions? All right. So Tom, we'll switch over to you. I'll let you do an intro here, and then I'll go back to sharing slides and get yours going.
Perfect. Thank you very much, Tracy. And thank you to everyone taking the time to speak to me today about the R&D tax credit. It's a pleasure to meet all of you virtually. As I mentioned, my name is Tom Peevich, and I'm a senior manager at RSM and our credits, incentives, and methods practice. So if you're not aware, RSM is a public accounting firm. We have roughly, you know, we're about basically by revenue, about the 5th largest accounting firm in the United States. So right behind the big 4. And we really focus on small and middle market type companies. So we have a group of about 30 individuals based here, mostly in the Midwest, that focus basically 100% of our time in calculating and defending the research and development tax credit for our clients. So it's okay if you don't know anything about tax today. We'll give you kind of some high level overview of the credit and some broad brush strokes.
Right. Because I didn't know anything about it at all. So, all right, let's get you rocking and rolling here. So obviously we wanted to start with what the heck is an R&D tax credit? Not
Yes.
you guys, but I didn't know.
Okay, yeah. And again, obviously we want this to be very, very open-ended. So obviously, please feel free to interrupt, ask questions as you may have. And again, the goal is not to give you to be an expert about the R&D tax credit by the time you get out of here, but again, give you kind of a general overview. But essentially, the R&D tax credit, it's been around since the early 80s. and was really developed to help spur, economic development, job creation, and more so anything to keep U.S. companies a little more competitive in the worldwide economy, just due to our higher corporate tax rate compared to other companies, or other countries across the world. So it was really kind of a way to level the playing field. And so it's a credit that's taken every year on companies' annual tax filing. It's just one form that would go into their annual tax filing on their federal form, as well as many states also have some sort of tax credit that's available to them as well. So it's really a credit that's developed or set out to help spur, obviously, innovation. And it's a credit that's available for companies that are developing new software and enhancing software. Obviously, from a manufacturing perspective, you're developing a new part, new product. All that would be eligible for this credit. And we have a question coming in. It's available for companies that are basically that are C corporations. So if you're a corporate tax liability, if you're a corporation, it's used to offset any corporate income tax liability they may have. And then also, if you're like a closely held entity, like an S corp or a partnership, the credit could be claimed at the entity and then is pushed through to individual shareholders based on their pro rata ownership percentage. So long story short, you could be a closely held entity, a private organization, or a C corporation, publicly owned. And so a few key aspects about this R&D tax credit, and probably the three big things before we get into it too much about what types of costs are eligible and what types of activities would be. The first thing is it's entirely an activities-based credit. So there's no requirement for success in anything you do. So if you start down a development path of developing like a new software code or new algorithms or new e-commerce website, and maybe ultimately it doesn't come to fruition, that the effort is scrapped altogether, that's okay. As long as time and effort is spent on the project, it's still eligible. So it doesn't need to be a commercial success, doesn't even need to result in $1 of revenue being generated from this if like a SaaS platform.
But all of our IT projects always succeed.
Exactly. For one, it doesn't. This is a way to kind of recoup some costs on it. So.
Sorry, I couldn't resist.
Yeah, no, yeah, exactly. That's where we'll get into a little bit later. We try to collect some documentation, substantiate this, and it's actually a better technical story if the project has some issues in it, because that shows the technical challenge and uncertainties associated. So we try to ask for some of this documentation, like, well, that's not going to really show this because all of our presentations are everything's on schedule, on budget, on time, and everything's working perfectly. So, but we'll jump into that. Also, it's a U.S. based credit only, so all the activities must be performed on U.S. soil. Now, you can certainly have customers and things that are based outside the United States. That's no problem whatsoever. It was, but as long as the activities must be performed on U.S. soil. So that's the key aspect, is because it's a U.S. based credit, all the activities must be performed in the United States. So if you have like contractors or things that are based outside the United States, those costs would not be eligible. And again, we'll go through what costs are eligible in activities, but if you have outside consultants that are based outside the United States, would not be eligible. Now, if they do come on shore for like sprints or 2 weeks, agile sessions, the time spent on U.S. soil would be eligible, but everything outside of that would not be eligible. And the last piece is, and I'd say this is probably the most important piece of this. I know initially probably when you heard R&D, you were probably thinking of companies that are doing new and innovative things to the world that no one else has done before. I mean, kind of use the parlance of our times here. You're probably thinking of companies developing like a new vaccine or cancer research drugs and things of that nature. That's actually not the case at all. The IRS's definition is actually much more broad. So in most cases, it doesn't need to be new to your company or even the industry. It just needs to be new. It doesn't mean new to the world. It just needs to be new to your company. So we always kind of say it takes more of an evolutionary approach as opposed to kind of a revolutionary approach. So just because maybe your competitor is doing something or someone else similar in the industry is doing this, that doesn't mean that you're not eligible for the credit. As long as it's new to your company, it could be eligible. So as I mentioned, it's a credit that's taken on your annual tax filing. So you're eligible for this credit every year, basically in perpetuity now. And, and for all intents and purposes, it ends up being about 7 to 9 cents on the dollar for federal purposes. And then also most states also have some sort of R&D tax credit as well. Ohio actually has a pretty lucrative R&D tax credit as well. And that ends up being anywhere from about 3 to 5 cents on the dollar as well for every dollar of qualified R&D spend. So, a simple example, if let's say you had $100,000 of combined spend that's based in Ohio, basically you had $100,000 of qualified costs, that could roughly equate to about a 10 to $12,000 credit, basically, that can be used on your tax returns. And again, it's a credit, so it's actually more, lucrative than a deduction, because a credit's actually going to reduce your amount of tax liability that's owed. So again, much more benefit than just a pure deduction, because this is a credit that actually reduce your liability. Also, another key aspect of this is obviously there's federal and state credit that benefits are available. Let's say for some reason that you're just basically not able to utilize this credit for 1 year. Let's say maybe you just have a tax loss in the year, your revenue has been down, or it's been a really expensive year in terms of maybe you're buying extra, equipment or servers or whatever it may be, but you're in a tax loss that year. That does not mean the attribute is lost, the tax credit. It can actually be carried forward for 20 years for tax purposes. So if you generate an R&D tax credit in 2020, and again, you don't have a liability generated that year, as long as at some point in the next 20 years, so by 2040, you have this credit that carries forward. So it can be used at a later date. Most states also have some sort of carry forward provision as well. So, and it's really based on the states, and the jurisdiction they operate in. So it could be 5 years, 7 years. Some of you even have infinite carry forward. So I believe Ohio is 7 years, but most of the states in the Midwest have a credit, and generally most of them, like Illinois, is 5 years. There's also a provision that allows you to carry it back the credit 1 year as well. So in that simple example I gave you as well, if you have a 2020 credit, you could use it to offset and carry it back 1 year and offset any tax that might have been paid in 2019 as well. So long story short, just because you're not able to utilize the credit in the current year, carries forward for 20 years, and it can be carried back 1 year for federal purposes. And again, most states also have some sort of carry forward provision instead of a carry back provision. Okay. So I think we can go to the next slide, or if we have questions.
Talks about some examples here.
Yeah. So these are just some recent success stories and kind of around the Kentucky and Ohio region. So we had a Southwest Ohio, Northern Kentucky distributor. They generate about a $325,000 combined federal and Ohio credit for basically 1 year. They had about $400 million in gross receipts annually. Some of the major activities, and again, we'll go through what kind of constitutes R&D and what costs are eligible, but some of the things that they were activities that they were performing that generated credit include like developing like an e-commerce platform. So obviously taking orders, shipping, tracking, products as they're shipped. This is generally more like the manufacturing side of things. So if you're developing like an entirely new product, from a manufacturing perspective, obviously the time developing that new product, the actual piece of part or product, whatever it may be, is eligible, but then even just general process improvements. So you're finding ways to produce the product better, faster, more efficiently. They also had a very sizable, ERP upgrades and customization. So, if you're buying a piece of ERP software off the shelf, that would probably not qualify the software license. But if you're having to significantly customize that base platform or off the shelf piece of software to integrate into your business operations and fulfill your requirements, some of those ERP upgrades and customization could be eligible. And then just internal customer, internal software development that you're developing. So this can be back office type things, again, to process things better, faster, more efficiently are a few examples. So that's kind of getting geared more to the manufacturing perspective. Obviously, this is more of a technology discussion today. So the next one would be like a Cincinnati-based technology company. They had about a $750,000 combined federal and Ohio credit for 4 years. They had about $75 million in gross receipts, per year. And they're really more of a software as a service platform. So if you're developing custom software that ultimately you're selling as a license, those types of custom software developments are going to be eligible for this R&D tax credit. They also were heavy in the cloud-based cloud-based backup, automated backup services, automation processes. Those would be eligible. And as I alluded to earlier, kind of some of those back office type process improvements, basically automating processes, increasing throughput, increasing speed, reducing defects. Those would be types of activities would be eligible. And then we have another Southwest-based manufacturer, had about a $485,000 combined federal and Ohio credit for a 2-year study. This was a significantly larger credit, larger company that had about $630 million in gross receipts. But the big one with this one is we captured a lot of their time around spent supporting, part and product development. So implementing into the manufacturing process. So anytime you're integrating, the programmable control logic on new parts and new equipment, that could be eligible, as manufacturing process integration. That was really like the IoT of things now is a big thing as well. Integrated hardware and software was where we focused a lot of their time on that company. So again, these are just a few specific examples, and we have a slide that kind of goes through what types of activities and costs are eligible, but just to give you kind of a flavor of what kind of dollar amounts we're talking about here and types of activities that are eligible for the credit.
So Tom, let me make sure I'm understanding what you're saying here. So for a company that had 75 million in revenue, they were able to get a $750,000 credit.
Over 4 years, yes. So if you
Okay.
divide that out
That's all right.
by 750 divided by 4 years, but that
Okay.
could be $250,000 range.
So what I'm getting from this is that almost any company who's doing something new in technology for themselves can come up with some pretty significant bottom line credits to their taxes. You don't have to be a big company to do that.
Absolutely not. Yeah. And that's probably one of the key aspects of this either. This is not for the Microsofts and Oracles of the world. These are for small businesses, middle-sized businesses. It can be anybody. And obviously in a various types of industry as well. So obviously we have a lot in the securities, financial futures trading market, obviously software development companies, obviously big ones, consumer industrial products, food and beverage, construction, engineering firms, all types of different industries would be eligible for this credit. And I did see a question come in. Yeah, it really is based on the activities that are performed and really your labor and spend basically, not on your gross receipts or sales. So that's a good point. But I guess long story short is it's available for any number of companies in terms of their size and certainly the industry they work in. And then with this, again, it ends up being, again, anywhere from about 10 to 12 cents on the dollar. So again, if you had $1 million of, let's say, qualified R&D spend, that could be $100,000 to $120,000 in combined credit. And again, it will go through what costs are eligible on activities, but just to give you a sense, kind of a back of the napkin, back of the envelope calculation.
Okay, great, thanks.
I think we can probably go the next slide. So we won't obviously go into this too much, but basically, in order for the credit, in order to be eligible for the credit, the activity must basically meet this 4-part test. And this is pulled directly from the IRS tax code and regulations. So it's really all activities must meet this 4-part test to kind of generate the credit. And the first one, I'll go through these with kind of some broad brush strokes, but the first one is basically permitted purpose. And all it's really saying is the activity must relate to a new or improved product or process intended to improve the function of it, the performance, the reliability, or the quality of it. So basically, this just means if you're developing an entirely new product or new software from scratch, that's going to be eligible, as well as some other activities, as well as like a product enhancement if you're taking an existing software package and improving it, or if you're just general continuous process improvement type activities. So if you're finding ways to process things better, faster, more efficiently, reducing scrap, reducing defects, improving performance, efficiency, all those would be eligible for the credit as well. Second test states it must be technological in nature. And all it's really saying is the activity must fundamentally rely on the principles of physical science, biological science, computer science, engineering. It's really just saying the activity must relate back to a hard science. It's trying to eliminate some of the pure soft sciences like pure marketing, finance, accounting type things. Those would not be eligible. It's really just saying it has to relate back to a product or a process, and obviously rely on some sort of technological science such as engineering, software engineering, chemistry, biology, physical science, something along those lines. And then the third and fourth parts of the test, we'll kind of talk about them one and the same because they're really kind of interrelated and they kind of placate off of each other. The third test is the elimination of uncertainty. And all this is really saying is you have a goal at the outset of the project, something you're either trying to achieve or develop or some sort of metric that you're trying to meet, but really you're unsure how to meet that goal or requirement or that customer's request. So in order to kind of alleviate or kind of test your hypothesis or design or something that you think may work or how to meet this goal, you perform that fourth step, which is the process of experimentation. And that's truly kind of the scientific or scientific method or iterative approach we go through to determine saying, yes, this looks like a viable option. This is going to meet our customers' demands or requirements, or this is going to meet our internal quality standards, or this is going to meet the metric that we're looking for. Or no, this isn't going to work. We're going to try a different approach, different design, different methodology to hopefully ultimately achieve your final solution set. Or as I mentioned earlier, maybe you never get there. Maybe the effort is scrapped altogether, or maybe it's a subset of the goals that you meet. So prime examples of this process experimentation can do if you're doing computer modeling, computer simulations, if you're building a prototype, any beta testing, user acceptance testing. Again, anything that allows you to kind of validate your design, gives you feedback, you take those kind of results, and then you make modification to it to hopefully achieve your final solution set. So, okay, that's the kind of 4-part test for general activities, basically. So anybody that's developing any sort of new product or enhancing existing products or process improvement would need to meet those 4 requirements. There is 3 additional tests. So if you're developing like internal use software, so these would be like your back office type things where really only your internal employees are using this. This would not be like if you're developing custom solutions for customers, or if they have some access to it, like in an e-commerce platform, like dual function software. Basically, it's saying that the software just basically must be innovative or unique and novel in some sort of way. So the example of this can be, like if you're buying like an ERP system, basically, if you're installing, like if you're buying 10 modules and installing all 10 of them, you're basically off the shelf software, it really just becomes an integration effort. That's not really going to be eligible for this R&D tax credit. It may be tedious and time consuming and very expensive, but that would not be eligible. But let's say there's 2 or 3 of those modules within that ERP system that just, are not going to meet your business requirements or your specifications. And then you're having to modify that base software platform and that canned piece of software, and you're really having to customize it, write custom code. That's what we can be considered innovative because it's different from the base platform. And that would be eligible. So maybe 2 or 3 of those modules will be eligible, not the 6 or 7, just standard integration. It also states there must be significant economic risk in this. This is basically just saying that there has to be substantial resources that are submitted to this, for this project. And there's not really a bright line test here. It doesn't include like a dollar amount or number of people or anything like that. So it's a pretty broad based term. It's just basically saying that, you've got internal employees that are working on this, or outside contractors, and that there's some question about whether or not you're going to be able to do this, right? Whether you're going to be able to achieve your results that you set out to achieve, or actually be able to implement this, meet the metric, meet your requirements. It's not just going to be a slam dunk off the right from the beginning. So, I mean, you think based on, your backgrounds and your team's educational experiences and things like that, similar project, that if you put enough resources on this, there's a pretty good chance you're going to be able to do it. But there still has to work through that process of saying, okay, how do we go about doing this? There has to be some kind of bumps in the road, right? And so that's really what this kind of test is aiming at. And then it kind of goes back to my original question of or comment about commercial availability. This is just saying, if you're buying something off the shelf software and you're installing it, that's not going to be eligible for this, like the software license, and then just basically buying and integrating, those types of activities not be eligible. But again, if you are custom enhancing that piece of software, those types of activities would be eligible.
So there was a question in chat. I think Warren's been our perfect straight guy today, asking questions that are coming up. Can you make sure I'm not sure we've answered his question adequately here. I think so, but.
Oh, I didn't see it here.
Yeah, no, that's okay. That's what my job is.
I didn't see there's 2 questions that have come through, the entity type and then also labor, not revenue. Was there another one that?
Yeah, it's
Something
as simple as paying technical staff to automate processes in an accounting system qualified. And his response, it sounds like it if it's customization. Is that correct?
Correct. Yes.
Okay.
Yeah. Absolutely. You're developing like automated test scripts and developing like APIs and ETLs to automate processes that were previously manual. Those types of activities would be eligible because it's custom software solutions.
Okay, that's great. Thanks.
I think we can. So I would say like there's another question came in, it's like restructuring network and new colo structures. I would say, that would probably go into like the performance improvement arena. So if you're trying to improve your backend databases and things like that to improve performance, get like sub-second response time, for on your websites, any type of activity where you're improving the performance, those types of activities would be eligible. And definitely if you're improving speed, processing power, those would be eligible for the credit as well. So I think we kind of went over this one. I think we could probably go to the next one. Let's see, was there another question that came through?
Yeah,
Okay.
will you be sharing how to calculate it?
Okay, yeah. So that's kind of what we're going through now. We kind of talked about the 7 to 9 cents on the dollar for federal purposes, and then anywhere from probably 3 to 5 cents on the dollar for Ohio purposes. So essentially, there's 3 buckets of cost that would make up the credit amount, and the largest driver of this credit, and really where the most basically the credit is generated, is for we could take a percentage of Box 1 W-2 wage amounts for employees that are developing new software, enhancing software, or those process improvement activities. We could take a percentage of their Box 1 W-2 wage amount. And a key with this is it's not only that just Box 1 W-2 employees that are actually doing the work, that are doing the software coding or development or the those types of activities. Obviously, that's going to be low hanging fruit and eligible for the credit, but we can also qualify 1 level support above. So this can be someone acting more in a supervisory capacity, like a CTO or director of engineering, that's really reviewing the test results, reviewing designs, reviewing the schematics, and giving feedback, giving recommendations. If they're sitting in product development meetings, that time, that supervisory capacity is also going to be eligible for this R&D tax credit, as well as 1 level support below. So this could be someone maybe from your operations team, if they're doing some, if they're doing like user acceptance testing or beta testing. Maybe someone from like your technical sales team, if they're going out meeting with customers and understanding the functional requirements and specifications, and then handing them over to your software development team, those can be eligible for the R&D tax credit as well. So it's really a broad bucket of time. It's not just the software engineer. It can also be 1 level support above and 1 level support below that are developing or helping support new product development, product enhancement, and process improvement type of activities. The next one is more supplies. This is based more like more consumer industrial product type companies. So if you're having to order like extra test materials like aluminum, steel, things like that to develop prototypes, that ultimately is like for like a proof of concept, those materials that are consumed during your development effort are going to be eligible for the R&D tax credit, like the aluminum cost, steel cost, and things like that. Where we have seen this come into play for software development companies would be, your supply costs to be like material costs to be, if you have like cloud consulting costs, basically for like cloud storage. If you set up like a test harness or something for data for your testing environment, some of those like cloud computing costs, like Amazon Web Services fees, could be eligible for this. Now, if it's just housing production data that you're using over and over and over, that would not be eligible. But again, if it's like a test environment that's consumed and you're paying for it, that could be eligible. And then another bucket of costs would be we call it like contract research. So these would be costs paid to outside consultants or vendors, 1099 employees that are performing research upon your behalf. So those types of costs, you're paying employees like an hourly rate, they're going to be eligible for the credit as long as they're based here within the United States. So those are kind of the confluence and aggregation of those 3 buckets of costs are what's going to make up that 10 to 12 cents on the dollar for the R&D tax credit. Okay. I think we can go to the next slide.
I'm trying.
Yeah. So as I alluded to earlier, we kind of talked about this, and I'm certainly not going to go through each bullet point, and we're going to send these slides out to look at, but these would be some examples of qualified activities. And I have some other examples that I can, send on as well. But, a design of an existing product or process, if you're enhancing existing function, developing prototypes, coming up with conceptual formulation design alternatives, new launch activities. Again, some of this on the right side is a little bit more kind of focused on, manufacturing, but certainly manufacturing integration. All these types of activities would be eligible for the credit. So it's really a broad spectrum of activities that'd be eligible. And again, I think the key with this is it's not only just your pure new product development time, it's also taking an existing product, and if you're improving upon it, that's going to be eligible for the credit as well. So if you're adding feature sets, adding functionality to a previous release, that's going to be eligible, as well as I mentioned those process improvement type activities. So if you're just finding ways to, again, process things better, faster, more efficiently, reducing, increasing throughput, reducing scrap, automating previously manual processes would all be eligible for this credit. And obviously all the associated testing associated with it.
Sorry.
Yep. So I know probably, a key area about this is, what do we need to do to claim this, and how do we substantiate this? And this is probably another key takeaway, with this is, I'd say, you're not required to have like a formal time tracking system to track your time for this in order to claim the R&D tax credit. I'd say probably 90 to 95% of the clients that we work with do not have a formal time tracking system. So don't feel like you need to have a system where every single employee is tracking every single hour to a certain project or a certain task. That's not a requirement at all. In most cases, an estimate of how much time certain individuals are spending is a completely acceptable methodology for this R&D tax credit. So the key is just maintaining documentation and be able to find that in order to substantiate the credit. So these can be, basically developing like a research credit requires the application of the 4-part test we talked about. So this would be developing like a project list, right? So just showing what projects are eligible for this credit that are meeting that 4-part test that we talked about earlier, or that 7-part test. So, developing like a detailed project list is probably the first step. And then also, then the next is kind of establishing a nexus between qualified time and projects. So if you have a formal time tracking system, that would be great. But if not, we have certain tools and things in Microsoft Excel that we can use to create that nexus between qualified time and projects. So we can say, Joe Smith, software engineer, we think he's spending 70% of his time on new software development. We can find a way to create that nexus between qualified time and the projects that he worked on. So, find a way to take that 70% that he's qualified and allocate it out to major projects or initiatives. So that's one way to kind of substantiate it. And then other things that we can do to kind of substantiate this, and details that we can collect to support this, would be, if you do have documentation associated with some of those projects. So whether they be, it would be, we probably go to the next slide, would be, I think we have some examples. Like these would be examples like documentation we collect to show why the project's eligible, and to create that nexus. So it would be, documentation of experiments that are conformed, UAT testing, regression testing, any design concept drawing, architectural diagrams, kind of showing the evolution of the design process, presentations, that you would show to the board of directors or review committees, like if you're in a stage gate process, or maybe even like an agile, like a waterfall or an agile approach. Any presentations that are developed to show to management, like quarterly updates, charter, project charters, things of that. If you're developing like white papers after the project's developed, even like budgets, things like that, work orders, internal authorization, emails, even patents are applied for, project summaries, any type of thing that's basically that shows an iterative design process that's undertaken on these projects is going to be eligible for the credit. So I think the key takeaway of this would be is, it's not going to be a lot of extra work. Hopefully a lot of this stuff is kind of already readily available that you're producing. It's just kind of finding the ways to kind of pull all this information together in order to substantiate that. So, I don't think it's got a lot of extra work. A lot of the stuff is probably already available and out, kind of saved on some shared network. It's just kind of pulling it together and supporting it. Yeah, and I think the question came in is can we present a project from the past? So the credit is actually claimed on an annual basis. So you would focus on those activities that are in the current year, but certainly, IRS understands that projects can span multiple years. So even though maybe a project was started in maybe, 2019, it could still be eligible for the credit in 2020 if it spans multiple years. Same thing if it was started in 2020, could expect to go forward into 2020 as well, 21 as well. And I didn't get into this too much, but the credit, again, it's claimed on your annual tax filing, but you do have the ability to potentially go back and amend prior year tax returns to claim this R&D tax credit. So, obviously you want to get it on a timely filed return. So right now it could be your 2020 return, but you could theoretically go back and amend potentially your 2017, 18, and 19 return to claim this credit as well. And so that may come into play if you want to claim projects in prior years as well. So that's kind of the documentation side of it for to substantiate the activities. Other costs that we collected to kind of support the costs would be, again, we talked about project accounting, timesheets, those time surveys that we can develop to create that nexus between qualified time and project. There's like for outside contractors, those purchasing orders, purchasing documents for outside contractors, contracts with third-party vendors are a great support piece. and then even just general ledger account details to show where the costs are hitting your financial statements and trial balances. So, and this is kind of just purely RSM's approach here. Obviously, there's a number of service providers that provide this R&D tax credit service in terms of calculating the credit and defending it for you. But we offer kind of more of a phased approach, and we kind of break it out into phase 1 and phase 2. So the first thing, the phase 1 would like pre-qualification and feasibility assessment. So what we would do is we would come in and give you a free of charge estimate of what we think the credit amount could be. And this would be just having some high level internal discussions with maybe your software development teams or your CTOs and acquiring some financial information. So this would be like org charts, employee rosters, Box 1 W-2 wage amounts. And we can kind of go through just based on our experience with the credit and similar projects and expertise in that certain sectors and industries. We could put together kind of an initial assessment to you what we think the credit amount could be in terms of the federal credit amount, any state credit amounts. And then with that, we could put together an estimate of what the fee amount associated with this credit study could be. And because we're a public accounting firm, we're not allowed to do these as like a contingent fee. So it would be, we'd show you the credit amount and then there'd be a fixed fee amount associated with this. And there's 3 or 4 different engagement options that we can be engaged in. We have a kind of a calculation only study, or we have a full audit ready deliverable schedule that you could turn over, or deliverable you could turn over to the IRS or state of Ohio if they audit this. And it's really just based on the number of hours it's going to take us to fill those obligations that are standard hour grades. So basically, we're not incentivized to increase these credit amounts, so we collect a higher fee on this as a contingent fee. It would always be a fixed fee amount. Other boutique firms, they're all actually allowed to have these as a contingent fee arrangement. So that would be like phase 1 is to get that initial assessment to you with the estimated credit amount and then potential fee amount. And then phase 2 would be where we go through and really substantiate those estimates that we've provided. And we would do that through collecting documentation. We would perform interviews with your project managers, your department heads, managers, maybe an hour and a half, 2 hours of their time, help them compile the cost information as well as those time surveys, and obviously the final computation of the qualified cost and credit. So kind of a phased approach. And again, phase 1 would be obviously free of charge because we want to know what kind of dollar amounts that you're talking about here. Is this a $50,000 credit? Or could this be a $200,000 credit? We want to make sure you have a general idea of what the credit amount could be worth.
So Tom, I don't know that I understand. I get that you're a public accounting firm. So what would a boutique firm be?
A boutique firm would be one that just basically only specializes in this R&D tax credit. So they would not be providing like audit services or tax preparation services. So basically not a full service accounting firm. They would just handle one specific area of the tax return. That's what we refer to as boutique. So they're allowed, because they're not signing tax returns and signing financial statements, they're allowed to do these as a contingent fee type arrangement. With us being a public accounting firm, we're not allowed to have those types of arrangements.
That makes sense, but I didn't know there was a boutique firm that would do just that.
Mm-hmm.
So, okay.
All right.
I think this was kind of our last question. So we've talked about a lot of things and how complicated is it? And one of the questions that came in chat was, what kind of IRS, I assume there's a special IRS form you have to fill out to claim this, because there's always an IRS form. So talk a little bit about why you'd want to use a partner, whether it's you or a boutique firm, versus trying to do this yourself.
Yeah, and that's a good question about, again, with this R&D tax credit, it's really just one form. It's a form 6765 that would go as part of your annual tax filing process. So obviously there's a lot of work that's done to substantiate those numbers behind the scenes, but it's really just one simple form that would go in the actual tax filing. So that's it's not like it's a lot of extra, forms and things that need to be completed. It's just really one form. Obviously, there's all the work behind the scenes to substantiate those amounts on the form, but it's really just one filing that goes in return. So, one of the questions we get all the time is, do we need an outside partner to kind of file this? And really, it's based on a broad spectrum. We have clients where basically they do a lot of this behind the scenes and they do the calculation themselves. And really, we have no insight into it whatsoever, but we do the tax return and sign off on it. We have others where, they'll do the credit, our clients will do the credit in-house and we just review it to make sure it's factually accurate. or there's times where we do certain aspects where we just interview, or maybe we document, or we put together project write-up. So long story short, we can be as involved as needed or as little as needed. And that's the same with other outside kind of public accounting firms or boutique firms. So it scales up based on your risk level and basically more so the size of your credit. But in most cases, I'd say, we use an outside provider. I would say that the credit amount to the fee amount hopefully is always at least in that 5-to-1 range. Again, we're not allowed to do this contingent fee, but hopefully, it's at least the credit amount's at least 5 or 6 times more than what your fee amount would be. And I'd say probably in most cases it's upwards of 8, 9, even 10-to-1. Obviously, the benefits of this improves your cash flow because these would be, instead of paying money for taxes, now obviously you're getting this cash back, or instead of, in lieu of paying the IRS, now you can take that money that would have been paid on taxes. You can hire additional employees, maybe other pieces of servers and hardware that you need to buy that can be purchased now instead of paying taxes. Obviously, it reduces your overall effective tax rate because you're paying less than overall tax. And I think one of the keys with this is one of the benefits we see of bringing in like an RSM or another accounting firm that specializes in this would be, your R&D specialists, they can identify additional areas of qualification. So I think most companies are able to kind of identify the low-hanging fruit, right? The new software development or new product development. It's a lot of those ancillary and support areas that we talked about earlier would be like the product enhancements to your existing product line, or those process improvement type activities. Your specialists can kind of help you identify those projects in order to help you maximize your credit amount. And then obviously the last aspect of this would be and key with this is you're not any more likely to be audited because you're claiming this R&D tax credit. So it doesn't sound any alarms in the IRS system when you file your tax return. It would always start off as a general revenue audit. So a revenue agent would look at your tax return, and it's just whether they choose to look at the R&D tax credit as a part of your overall return. So there would never be a specific R&D tax credit audit. It would always be a general, revenue tax return audit. But if an agent did decide to look at your credit, obviously having an outside service provider such as an RSM or a public accounting firm or a boutique firm, they're going to help you identify and calculate the credit correctly, as well as they're going to help you with that support and methodology in order to substantiate your claims. And that can be those time matrices, putting together project write-ups to substantiate the credit, collecting documentation. They can help you put all that together in kind of a condensed, consolidated form. So if, again, the IRS did choose to audit this, or state of Ohio, you can hopefully turn over this audit-ready deliverable, would hopefully alleviate any questions they have right off the bat.
Great.
So I know we threw a lot at you, but obviously feel free to contact myself or Chris Philpott or Jim Cronauer. We've provided our names, or our titles, and email addresses and phone numbers. So we're happy to give you a call to answer any specific questions you have about the R&D tax credit on the whole, or if your company is doing an existing study now, ways to maybe improve upon it or maximize it. Happy to jump on a call with you and answer any specific questions that you may have.
Thanks. So I don't know about you guys, but I definitely learned some things. I think that we answered all the questions in the chat. If not, feel free to go off mute and raise any other questions or reach out to any of us. Hey, Doug, I know you guys have stuff that qualify for this.
I mean, you just, that credit basically describes my entire vertical of the technology team.
Mm-hmm.
So
yeah.
I guess from one of the very, I guess, more specific questions I had is I realized this is the US based credit.
Mm-hmm.
The activities need to take place in the US. If you are contracting on some of the qualified work, but some of the activities are being performed by, offshore, nearshore resources, does that disqualify those supporting, like the supervisory support?
Sure.
And the one level below support, is that disqualified if the technical activities are taking place?
Yeah, great question. It would really just be the cost incurred for those resources offshore. Now, as long as it's really a soil-based test, boots on the ground test. So as long as the activity is performed on US soil, those costs are going to be eligible for credit. So just because some portion of it is offshore doesn't doesn't poison the water for the entire project.
Okay.
It's really just based on the activity level.
Well, I was just thinking from my situation specifically, we contract with a software development firm from Mexico, but that requires a lot of collaboration and a lot of supervisory work on our end.
Yep.
House.
All that onshore would still be eligible for the credit. Just those contractors based in Mexico would not be eligible. But again, if they did come onshore, you know, for like a 2-week event or something, they would be eligible for the credit then.
Okay, cool. Thank you.
And it's really, that's a good point. And I certainly don't want to put any words in people's mouth, but I would say, you know, what we've seen is most of IT team's time is probably going to, some portion is going to be eligible. You know, if some of your pure maintenance type activities or customer service type thing, help desk, you know, that's probably not going to be eligible. But anytime you're developing new software from scratch, all the way from the initial conceptualization, the brainstorming, the whiteboarding ideas, the business requirements, all the coding, obviously all the testing, basically until that's put into commercial production, all that is going to be eligible for the R&D tax credit. And it really is low-hanging fruit for new software development. And then again, if you're taking existing, you know, software that's maybe already commercially viable or that's implemented or in production, if you're improving upon that, you're adding feature sets, adding functionality, basically based on customer feedback or maybe your competitors are doing that, those product enhancements would also be eligible for the credit. So there's a high probability that a large percentage of, you know, IT groups' time are going to be eligible for this credit.
Yeah, knowing some of you and what you do, there are at least 4 of you on this call that I think probably qualify for this stuff. So hopefully that was all helpful. We have recorded this. We will send it back, send it out here in the next couple of days so that you'll be able to pull it all up. And we're happy to connect you with these folks. If you lose it or can't find it, just reach out to Taryn or I, and we'll make sure you get connected to the right people if you have any other questions. We'll be looking at the schedule coming up. Taryn will be sending out the updates regularly for future events, and we look forward to seeing all of you. So thanks for joining us this morning, and we have a great week.
Awesome. Thank you.
Orrin, good to see you. Orrin, good to see you again. Thanks for straight man today.
Good to see you, Tracy. Thanks, everyone.
Thank
Great
you.
presentations.
Take care, guys.
Bye.